Most people underestimate the best time or a particular time to trade. Now, some of you guys might be jumping from one particular time frame to another particular time frame so that you can be able to find or seek clarity in the market. But in this video, I'm going to tell you and show you that with a minimum of 2 time frames only, you can still be profitable. You don't need to trade so many time frames. You don't need to trade or to jump from one time frame to another, from monthly time frame down to weekly time frame, daily time frame, 4-hour time frame, and down to 5-minute time frame. You don't need all that noise so that you can be able to be profitable. You only need at least 2 time frames. That is the major time frames that you need. So from now on, after watching this video, I will assure you and I beg of you to please choose only 2 time frames that you are going to start to be using from now on. In this video, I will show you the best 2 time frames that I use as a daily trader. You all know how this game is being played. As a daily trader, you need to be trading every day. You need to seek for a strategy that is going to be producing your setup every day. That is all you need as a day trader. Now, looking at the market, we are going to be using only 2 time frames: our analysis time frame and our entry time frames. No other time frames except these two. Which time frame are we talking about? The 4-hour time frame and the 15-minute time frame. What is the use of 4-hour time frame? Our 4-hour time frame will be used for our market buyers. We're using our 4-hour time frame for our market buyers, while our 15-minute time frame will be used for our market entry. Do you guys understand me clearly? We'll be using our 15-minute time frame for our market entry, while we'll be using our 4-hour time frame for our market buyers. So now this is Euro USD. As a day trader, let's seek to know if we are going to see a clear setup using only these 2 time frames. Clear setup using only these 2 time frames without messing around or making or creating mistakes. So let's start. This is Euro USD. Remember, if you do not understand the market structure, you leave the market. Do not waste your time. Leave the market. Don't waste your time around vibrating around the market. Now this is the 4-hour time frame. What do we have here? Now our focus on the 4-hour time frame is only on the current structure of the market. All this noise are none of our concern because they are already in the past. Yes, we can be able to use our past to forecast the future. Yes, I'm not doubt on that. But all I am trying to say is that all this noise, they do not really matter in the market. They do not really matter. So let's now focus on the current structure of the market to see if we are able or if we are going to formulate a clear and perfect setup for today's trading. Current structure from the market is going to start from here to here. This is my consign for today. This is my consign for today. This can also be seen as our liquidity area, because if this low failed, I think price is going to use the opportunity of this failed low to sweep out liquidity residing below here and also tapping into this particular acknowledgement area and start booming to the upside. this is what I think from the market if this low failed. Now, this is our corner. Let's take all this out. Let's take this out. Let's also take this out. Now, this is our current market structure. What do we have here? We have our internal break of structure. Now, we have two types of break of structure and two types of change of character. First of all is our internal break of structure and external break of structure. We also have our internal change of character and external change of character. I taught you guys all this in my previous video. Go back to my previous video so that you can watch all of this and learn from it. Do you understand? Okay. So let's continue. Now, this is our internal break of structure. From here to here is our internal break of structure. If we are seeking for an external break of structure, that means price should do us a favor by breaking this particular man above. Then this is where we're going to seek for an external break of structure. If price should also break this man below, this is also our external change of what? Change of character. Do you understand? So now, from this current structure, the main purpose of this video is for you to understand how to do the analysis, because if you want to imply what you see here, the charts might be different from the current one in which you are watching this video right now. So now, this is our break of structure to the upside. What's next after finding a break of structure? If you have been following me for a very long time, you will notice that I usually have so many types of confirmations before forming one particular and one strong setup. I combine so many components all together so that my one setup can be a perfect and a perfecto A plus setup without mixing anything to it. First of all, we use our 4-hour time frame to find our daily bias. If you want to learn how I was able or how I used to produce a perfect setup, go back to my videos and watch them. So this is our break of structure, and after finding a break of structure, what next? Order block that causes that break of structure. Remember what I said about order block? The last candlestick after a massive aggressive move. Where is our order block located? Over here. Some of you guys will see this is our order block. Yes. Some will point this one out too as our order block. But from experience so far, these are just traps. This is our main order block here. This is the last bullish bearish candlestick before this move starts occurring. So this is our order block here from our 4-hour time frame. After finding our order block, what's next? We are finding our fair value gap. Now look, let me show you something. You can see a tiny fair value gap over here. Open. Look closely. The more you look, the more you see. You can see our fair value gap over here. From here, no, not there. This is not where I want to be pointing that. From here, let me unplug this piece. So from here to here. That is where our tiny fair value gap lies. To here. This is where our fair value gap is inside this particular small ratio there. We also have this fair value gap here, but it has also be mitigated by the market. This is our fair value gap, but it's now invalid. So this is our main fair value gap over here that is also in alignment with our what? With our order block. So what next after seeing a fair value gap? Remember, we've marked out our market bias. We've also marked out our order block. We have also marked out our fair value gap. What's next? Liquidity. This is our liquidity. This is our liquidity here. Remember, we are able to picture all this in the 4-hour time frame. Okay, I'm still coming. Understand this first. This is our liquidity. If price can do us the favor by sweeping below this liquidity and tapping in here, then we'll be seeking for our entry pattern model. By now, as a trader, you should already have your entry pattern model. It can also be seen as your entry confirmation model. You need that as a trader. You also need that. You can't just be jumping into the market vividly without any sight of what you are doing. Do you understand? So now, what do we expect from the market in our first 15 minutes? After this is our analysis in our 4-hour time frame. We are going to be going down to our 15-minute time frame to know what to expect from the market. Yes, hold on. Okay. So for my 15-minute time frame, what do we expect from the market after this big analysis? You can be able to counter trade when market is thin about this particular place. You can be able to counter trade it and it will take you down to this our entry. We need to be patient. We need to be patient for price to do us the favor by sweeping this particular liquidity. So we need to be patient. Now, if price should tap into this particular place, you can't just start placing your entry, your risk to reward ratio. No, you cannot start doing that. No, you need a confirmation. What is the confirmation? Now let me draw it. If price should start doing like this and tapped into this particular entry, you need something like this. Double bottom, break of that bottom, and the neckline. Then you enter. That is if you're a price action trader. If a SMC, you focus on smart money concept, we believe that we used to, after wait for price to tap into this entry, we're waiting for something like this, a mitigation block or a what? Or a breaker block. Then after a failed low and a equal low causing a break of structure to the upside, we're waiting for price to test into the FVG or other block being created before going in. They are all the same thing, but their risks are much different. This man is entering from here, putting his stop loss. There's this price action trader below this two lower equal bottom or double bottom as a price action trader. As a SMC trader, we are also placing the same trade, but our entry should be here. Our stop loss should also be below this man here. You can see our stop loss is 15 pips. This one stop loss is 32 pips. You can see why SMC is always good. And our risk reward ratio is always perfecto. This TP is Okay, let's see the 1:2 of this TP. 1:2 of this price action trade that is 66 pips for take profit. Let's also put that 66 pips here. This is going to give us 1:4, but for a price action trade that's giving them 1:2 what? 1:2. This is it. This is the pattern that you're waiting for. Okay, I can't delete them all, so let me delete them one by one.